The fall of Silicon Valley Bank in just 48 hours is the second biggest bank collapse in U.S. history, and it sent shockwaves from Silicon Valley to Wall Street to Main Street. SVB was known as a tech lender and held more than $200 billion in assets. It was hit by a bank run and a capital crisis, as well as rapid rising interest rates. The failure sent bank stocks plummeting. Customers withdrew a whopping $42 billion in deposits by the end of Thursday. In Massachusetts, customers were turned away from accessing their cash and were told to come back on Monday. Deposits are insured by the FDIC up to $250,000. The FDIC said all insured depositors will have full access to their insured deposits by no later than Monday morning, and it would pay uninsured depositors a, quote, advance dividend within the next week. But for corporations, it's a different story. For instance, Roku held approximately $487 million, a quarter of its cash, at SVB. And Roku said most of its deposits with the bank are uninsured. Could this, the second biggest U.S. financial institution failure since the crisis of 2008, lead to a larger systemic failure? That is this week's poll question. If you go to smirconish.com and cast a ballot, and I hope that you will, is the failure of Silicon Valley Bank an isolated event, or will there be broader financial contagion? Joining me now to discuss is Aaron Klein, a senior fellow at the Brookings Institution and former Deputy Assistant Secretary for Economic Policy at the Treasury Department. Thanks so much for being here, Aaron. What's your answer to this week's poll question? Isolated or more contagion?
Well, look, I don't think this is the type of contagion that's going to lead to a horrible disease that's going to bring down the financial system as we saw in 2007 and 8. However, I'm not sure it's completely an isolated incident either. Look, Silicon Valley Bank isn't the first bank to go under this week. Silvergate, a smaller bank that had leaned heavily into crypto, self-liquidated and went down a few days earlier. There are a couple more dominoes that could fall. So I'm not sure this is a completely isolated one-off event. But I also think the regulators have been telling us that the contagion from crypto is contained within parts of our financial system. And Silicon Valley Bank is big, but it's not like other banks of its size, the large regional banks. So they have a different business model.
Aaron, I've read that nearly all, I don't know how this can be true, but nearly all of their depositors are in excess of the FDIC limit. Does that sound right to you?
So it does, because this isn't, look, it's a $200 billion bank, which is what we would call a large regional. Fifth Third, Key Bank, Huntington, those big banks that you see kind of in large portions of America. Those banks are about the same size, but they have about 1,000 branches. Silicon Valley only had 16 branches, despite being the 16th largest bank in America. How could that be? Well, they didn't take that much money from regular consumers. They took it more from companies. They banked startups, and as those startups got bigger, they kept those relationships. You mentioned Roku is a perfect example of something like that. So companies tend to have money in excess of deposit insurance, whereas ordinary Americans, regular viewers, rarely have more than $250,000 in the bank account. Frankly, a lot of Americans would be happy to have $250,000, period, among all their assets.
Aaron, the Wall Street Journal today, in its lead editorial on this, raises the question of how will the government respond. I want to read you a paragraph from that editorial. I'll put it up on the screen. It says, but if SVB was doomed, it is better to let it fail than have the government bail it out, despite what one hedge fund lord suggested this week. Didn't we learn from the 2008 crisis that the Fed's rescue of Bear Stearns encouraged everyone to believe that Lehman Brothers would be rescued too? Your reaction?
Well, look, I would say the following. There are just under 5,000 banks in America and about the same number of credit unions. The right answer for the number of banks to fail on a given year is greater than zero. If you have no bank failing, then you probably have bigger problems in the economy. Look, the first time in American history we went a year without a bank failure was 2005. 2006 was the second year, and the regulators told us at the time that they'd won. This was great regulation. See, no one was failing. The system couldn't be safer. Kablooey. So what you have to say to yourself is, look, banks take different types of risks. They run different types of business models. Some of them fail. That being said, you do need to be careful that the failure is borne by the loss of the risk takers at the bank and less so by companies that are just seeking a bank to do their general business. I am very concerned with how regulators handled the explosive growth of Silicon Valley Bank and its reliance on unusual funding sources to maintain and handle that growth. So I think there are a lot of important questions to be asked, as we uncover this failure and lessons to be learned.